everyone, and welcome to today's webinar, Holiday Trading Explained, a quick guide to smarter and more flexible benefits. It's great to have you with us today. I'm thrilled to be joined by Phil Curtis, who's our Managing Director of Benefits. Welcome, Phil. How are you?
Very good. Thank you very much, Catherine.
Fabulous. Just in case people haven't met you before, could you give us a little précis of your experience and what you do and how you're part of Ciphr?
Indeed. So, I founded a business called Avantus 20 years ago. And by good fortune, we were acquired by Ciphr in November of last year. So I now head up Ciphr Benefits, and we are gradually expanding our reach across the Ciphr client base and out to the wider world.
Fabulous. Thanks, Phil. So whether you know Phil through Avantus or you know us as Ciphr, it's great to have everybody with us today. Here's a quick look at what Phil's going to be covering. We'll give you a quick introduction to Ciphr before moving on to holiday trading, scheme mechanics, how to treat that when it comes to contracts and tax, what are the potential savings for employers, any concerns and how to overcome objections, and then Phil has time at the end to answer your questions. So if you have questions, please share them using the Q&A area or use the public chat function just to say hi and share any thoughts you might have. This webinar is being recorded and we'll email that recording to you afterwards. If you're new to Ciphr, here's a quick overview of all of the products, services and content that we offer. We really do offer a solution for every stage of the employee lifecycle, right from recruitment and onboarding through to central HR, payroll software and bureau, benefits, of course, e-learning and DIB consultancy services. We won't go into any of those particular products today, nor is today a demo of the benefits software. So if you're interested in learning more about any of those, you can find out more on our website, which is ciphr.com, or you can email us at info@ciphr.com and we'll be happy to help. And with that, I'm going to hand over to you, Phil. Thank you so much.
Thank you. Thanks, Catherine. So the nights are drawing in, kids back at school, looking around my office, everybody's got a cough or a cold. Good time to think about holidays. Summer feels like ages away, and holiday trading feeds into that really nicely. So what is holiday trading? Essentially, it's giving employees the chance to buy or sell extra holiday days. It's a really popular benefit, and of our sort of 300 or so benefits platform clients, around 3/4 of them have an active holiday trading scheme. Typically, it's buy only, so you're giving employees the chance to buy maybe up to 5 days. Some sell, and that's often an option that's given at the end of the holiday calendar year. How does it work? So next section, please, Catherine. So step one, you need to establish the value of a holiday day. And we usually work with the working day convention. So 260 days are working days in any calendar year. You simply take the individual's salary. And in our example, we've taken 32,500, divide it by 260, and it will give you a daily rate of £125. And that's the cost to that individual for buying 1 day or indeed selling. A little bit more complicated with part-timers, but as long as we know their FTE, i.e. their salary if they work full-time, and we know the percentage hours they work in a working week, we can calculate the cost of a day that way. You need to decide how you're going to run the scheme. Most commonly, it's a buy-only option, and up to 5 days is also typical. And occasionally there's a sell option, and that's typically at the end of the year. Not so popular, the sell option. I think it's harder for businesses to forecast what the cost of that might be. And at the moment where costs are really in sharp focus, that's proving a little bit trickier. But usually it's a buy-only option. Up to 5 days is very typical. And the mantra is really to keep it simple. From a payroll perspective, we usually see the cost of those holidays spread over a 12-month period in equal monthly deductions. Thank you, Catherine. So contracts and tax matters. Holiday trading is not a salary sacrifice in the true sense. You won't find anything on HMRC's websites that gives you a prescriptive answer on how to treat it. So where you will find that is around cycle to work, pension costs, electric cars. It's not mentioned in that way, but it does take the form of a salary sacrifice, especially if you buy a holiday. So the cost of the holiday will be deducted from gross pay, where employees buy. So for example, a £10 deduction, by the time it hits your net pay, basic rate tax bill costs you £7.20, higher rate taxpayer £5.80. So the deduction is before tax and national insurance. The reverse is true if you sell holiday, it's added to gross pay. You pay tax and NI on that. It's important to note that holiday trading is a variation to an employment contract. You're essentially saying if you buy, pay me less, but give me more holiday. So it's a contractual variation that needs to be evidenced. You will need some form of agreement as a variation to the employment contract. Thank you. The next section, please. So importantly with holiday trading, it can be a really significant saving for the employer, for the business or charity or other organization. And we've got an example here, and let's say we've got 200 employees, average salaries of 32,500. And let's assume that half of our employees take up the opportunity, and evidence suggests it will be at least that in most organizations. And let's say the average purchase is 3 days a person. So we take 100 people, 3 days, £125 a day. That totals £37,500. And not to forget the national insurance employers NI on that at 15%. That's an additional 5,625. So yeah, as a typical example, it's probably on the lower end of take up. And you can see just how significant the reduction in payroll costs is, and that's real. And if we move on to some of the difficulties or objections around the scheme, when we talk to clients or prospective clients about holiday trading and we talk about the savings, we often get the reaction, yeah, okay, you're talking about the savings, but we'll need to replace that resource. Experience suggests that that's not necessarily the case. And I don't know about you, but when I'm about to go on a holiday, I become the best delegator. I'm at my most efficient. If I worked that way every day, I'd be amazing. And you do tend to find that with people going on a holiday. It doesn't necessarily mean you need to replace the resource with tents or other things. We do appreciate it might be more difficult if you're perhaps have people on production lines, if somebody's putting the final touches to a chocolate box or whatever, that's a consideration. And equally, if somebody is a fee earner, maybe a lawyer who's on the clock, that's also another consideration if you're reducing those resources. But generally, the savings are significant and they are real. Other questions around administration. If you keep the schemes simple, we generally overcome any admin issues. The easiest route is to offer a buy-only option once a year, and usually in the month before the holiday year kicks off. Have divide the cost by 12 simple monthly deductions. That's easy for payroll, and it's easy if you need to do lever calculations. So that's really whistling through the key elements of holiday trading. Catherine, if we can go just to the recap. I think in short, this is a really, really popular scheme. Employees love the fact they can get extra holiday, and they often forget that it's actually been paid for by them. It gives a really warm, fuzzy feeling. It's a great introduction to flexible benefits. It's meeting the needs of individuals. It can be launched independently of other flex opportunities, but it's really nice as part of a package. Usually really significant savings for employers. We had an interesting example. We worked with a charity a couple of years ago, and they needed to save cost, and they were looking at a redundancy program. But instead of doing that, they offered all their employees up to 15 days holiday training. And by doing that, the take-up was fantastic. They avoided any redundancies. So it's an interesting way that the scheme can be used. It's easy to launch holiday trading. December, if your holiday year is 1st January to 31st December, December is fantastic. And there's still time to do that before this December. And naturally, as I would say, using a platform such as ours makes that a much easier process. And that just about wraps it up, Catherine. And I don't know if we have any questions coming through.
Thanks, Phil. Yeah, sorry, I was just coming back here. We've got loads of questions, which is great. So we have questions about holiday trading. We have questions about the benefit system and its integration with Ciphr. So I'm just picking the best one to start with. So question from Donald. In your experience, what is the average holiday allocation that you see with you, including like statutory holidays and annual holidays? 28 days, 30, 33, 35? What kind of numbers are your clients typically offering their staff?
That's a very interesting question. And we have a really broad range of clients. So obviously there's a statutory minimum, 20 holidays and 8 bank holidays. It's just a broad range. I think we see from 23 to 25 days being a typical starting point. And if I had to say that's the average, I would cut it around there.
Okay, thanks very much. So Jessica asks, do you deduct the holiday by salary sacrifice or just as a normal deduction?
Holiday by, yeah, it was a deduction from gross pay. So if on your pay slip you're showing cycle to work or childcare vouchers as a line item after deduction for reduction of gross pay, holiday trading by would be exactly the same.
Amazing, thank you very much. And I'm just going to share this comment from Debbie. Thanks, Debbie, for sending this in. She says they've started the scheme for the first time this year and have already had over a quarter of staff take it up, and they offer buying each quarter. So that's just a different way of approaching it. So thanks, Debbie, for sharing that. We've had a couple of people question, how might this impact people who are on or near national minimum wage?
Yeah, that's a good question. So my advice would be to not drop below national minimum wage. It's not quite the same as the regulation around salary sacrifice where that's explicit, but I would suggest following the same process.
Okay, thank you very much. Let me just go through these. Another question here. You mentioned that holiday trading is a variation to contract. What documentation should we capture or send to the employee to ensure we are compliant?
Yeah, it doesn't need to be too complicated. It would follow a similar form to a salary sacrifice agreement, which essentially says we vary your salary by X in return for which we're giving you Y. There's a little bit more to it, but that's essentially the record that you need to keep.
Okay, thank you very much. And just to say that your HR system might be able to help you with issuing those letters and storing them. That's certainly how we use the Ciphr HR system. I have done, while working at Ciphr, holiday purchase, and I have had a letter added as a sort of appendage to my contract, and that's all stored in our HR system, so I can go back and look at those. So that's how it's worked for us in the past. Guy asked, does this impact pension contribution?
It can do, generally not. Generally, pension contributions are based on gross salary before any deductions or reductions. Some schemes are different, so I would just add a word of caution to that, but generally no impact. Okay,
thank you very much. Questions are coming in thick and fast today. Steph asks, if the purchase days are not used before the end of the year and carryover is not allowed, would it be wrong to take away these days after the employee has paid for them?
So holiday trading would follow all your existing holiday rules. It doesn't change your holiday policies. So if your policy is use it or lose it, anyway, the same rule would apply. So follow existing policies is the answer to the question.
And I would just add to that, you might also want to think about how you're reminding people to use their holiday. So I'm thinking about how our Ciphr HR system is set up here. I get a notification every quarter of how much holiday I have left to use by the end of the year, and a warning that I really should use it if I haven't been booking that in. And also as a line manager, I see those notifications for my reports as well. So I'm aware of if they are likely not to use up their holiday allowance before the end of the year. So having those kind of automated notifications in your HR software can be really helpful for helping to plan leave and making sure that people do use it, particularly if you have a use it or lose it type policy. So that's just something to think about, is how are you making sure that people are using your holiday. Let me just review the questions. Karen asks, in your experience, do businesses just tend to offer buying holiday or both buying and selling, and is selling more complex to manage?
Good question. Most offer, they all tend to offer buying. Most of the schemes are just buy. Selling is not necessarily more complex. I think the issue for businesses, because you can't determine what that sell might be, and that is a cost to a business, it's become less popular as an option.
Yeah, and I would just add that from like a HR perspective, you might want to consider, if you're thinking about introducing selling, how does that affect employees' well-being? Is there a minimum threshold below you might not want employees to sell more than a certain amount, or how might that affect their ability to rest and be productive and stay healthy? So it's not just the financial side of it, it's what does impact that has on employees, because some may want the extra salary, but at what cost in other areas. So sorry, Phil, I hope you don't mind me jumping in with these extra bits.
No, thank you.
Okay, I think we've covered all the questions that have come in around sort of the mechanics of holiday trading, although if you have more, please do send them in. I've just tried to batch them so that we talk about the mechanics. And now we have some questions about the benefits platform, Phil, if you're happy to answer them. So we have a few people asking about how the relationship between the Ciphr HR and payroll software and the benefits platform that we now offer, which you may know as Avantis, but we sell as Ciphr Benefits. So could you please talk a little bit about how those two systems relate to each other and how they might work together?
Yeah, of course. So if we have an integrated solution, employees would seamlessly go from their HR environment to the benefits environment, and any selections they make in the benefits environment, holiday trading, cycle to work, increase the pension, all that feeds directly back through and is automatically updated. And if you're doing payroll with Ciphr too, that feeds through to that as well. So it's providing a seamless integrated proposition.
Yeah, fantastic. So if anyone is a customer, a current Ciphr customer, and would like to know more about the benefits platform after this call, we're happy to show you how that works. Equally, if you're not a customer with us at the moment, we'd still love to show you the benefits platform anyway. So there's a little button on your screen. If you're interested in seeing a demo of the employee benefits platform, you can hit that button and we can set that up for you afterwards. So Amy asked a follow-up question there. She says, is the information also updated in allowances area? Do you know that, Phil?
Yeah, it absolutely can be. Yeah, good question. So it can feed back into the holiday allowance section of the HR management system.
Fabulous. Thank you very much. So I'm just battling through these questions. Maria asked a question about Ciphr being a global platform. So in terms of the HR software, our core users are based in the UK, but we do have users overseas. And in terms of the Avantis benefits platform, that's used globally, right?
It is, yeah. Yeah, and we have clients in Mexico, Singapore, across Europe. Yeah, and holiday trading is something that actually works quite well internationally because we're not so dependent on local rules. But yeah, definitely.
Fantastic, thank you. Amy has a follow-up question about the allowances. Does it update in allowances to allow for payments and deductions?
It depends how you're running payroll, but yeah, essentially the answer is yes.
Okay, thanks very much. That has come to the end of our question. So thank you very much, Phil. I think you dealt with that Q&A admirably. And thank you, audience, for sending in so many questions. We really appreciate it. As promised, this was just a quick tour through holiday trading. And holiday trading is just one of the types of benefits that we can offer through our employee benefits platform. Really, we can do any kind of benefit you'd like to offer. We can make it happen through the employee benefits platform. That's right, isn't it, Phil?
Yeah, it is,
yeah,
absolutely.
Good. Amazing. So if you would like to see a demo of that platform or find out more about our HR software or our payroll software, you can opt in for more information using the exit survey that you'll see on your screen. And when this webinar closes, we'll also ask you there for a bit of feedback about today's session. Do you like this shorter format, this like more focused topics? Please let us know your thoughts. Otherwise, thank you for joining us today. Thank you, Phil, for sharing all your expertise.
Thank you very
We
much,
appreciate
Catherine.
it.
It was great.
And we hope to see you at another broadcast again soon. Take care, everyone. Bye.
Thank you.